Hi, I'm Satyam. Today, I would like to reflect on the performance of the Indian stock markets, which, after achieving all-time highs earlier in the week, ended the session flat. This comes as investors gear up for the anticipated interest rate cut by the U.S. Federal Reserve next week. Despite today's marginal dip, this week has been one of the most successful for Indian equities since the end of June, driven by positive sectoral performances and global economic developments. To begin with, let's take a look at the key numbers from today's session. The Nifty 50 index closed slightly lower, down by 0.13%, settling at 25,356.5, while the Sensex shed 0.09%, ending at 82,890.94. Although both indices ended in the red, they showed resilience, especially after a remarkable rally that led to fresh all-time highs just a day prior. Importantly, the overall performance for the week has been highly encouraging, with both benchmarks rising by around 2%. This marks their best weekly gain since June end, underscoring the positive sentiment that continues to drive investor activity in Indian markets. One of the key factors behind this week's strong performance has been the impressive rally in consumer stocks. This sector has seen a 3% rise over the past week, fueled by optimism surrounding demand revival and volume growth, particularly in rural areas. The stable monsoon has played a pivotal role in boosting confidence in consumer demand. As we know, a good monsoon season is critical for the agricultural sector, which in turn supports rural consumption. With consistent rains, the outlook for consumer-driven sectors is bright, and this has been reflected in the stock market's performance. In addition to the consumer sector, IT stocks also played a significant role in driving the market's gains this week. Indian IT companies, which earn a substantial portion of their revenue from the U.S., saw their stocks rise by 2.8% in anticipation of a near-certain interest rate cut by the Federal Reserve next week. This has been a key focus for global markets, as a rate cut could signal a more accommodative monetary policy stance, leading to greater liquidity and potentially stronger demand for IT services from U.S.-based clients. The expectations surrounding the Federal Reserve's upcoming decision have been a dominant theme not only in India, but across global markets. Investors are largely pricing in a 25 basis point rate cut, which is expected to provide relief to the U.S. economy and, by extension, have positive ripple effects on emerging markets like India. A softer interest rate environment in the U.S. could spur more foreign investments into Indian equities, particularly in sectors like IT and financial services, where Indian companies have significant exposure to international markets. However, it's important to note that while the rate cut is almost certain, the future trajectory of the U.S. economy remains a key factor that will influence market sentiment moving forward. The scope for further upside in Indian markets is closely linked to whether the U.S. economy manages to achieve a soft landing. A soft landing refers to the Federal Reserve's ability to slow down inflation without causing a recession. If the U.S. economy can successfully navigate this path, it would support global economic stability and create a more favorable environment for equity markets worldwide. On the other hand, if the U.S. economy faces more significant headwinds or slips into recession, the global economic outlook could become more uncertain. This would likely lead to increased market volatility, not only in the U.S. but also in emerging markets like India, which are closely tied to global capital flows. Therefore, while the immediate outlook remains positive, driven by the expectations of a rate cut and strong sectoral performances, we must be mindful of the broader economic landscape. Another important development that has caught the attention of investors is the growing optimism around India's domestic economic outlook. India has been one of the top-performing markets globally this year, and the strong performance in sectors like consumer goods, IT, and financials reflects confidence in the country's growth prospects. With stable inflation, robust economic policies, and steady foreign inflows, Indian markets have been able to outperform several of their global counterparts. The Federal Reserve's rate decision will be the most closely watched event. The impact of this decision on global liquidity and capital flows will have significant implications for Indian markets in the coming weeks. In conclusion, While today's session ended flat, the broader picture remains highly positive. Indian markets have logged their best weekly performance since June end, and the rally has been driven by strong sectoral gains, particularly in consumer and IT stocks. The anticipation of a rate cut by the U.S. Federal Reserve next week has added to the optimism, with investors expecting increased foreign inflows and a more favorable environment for global equities. However, as we move forward, the trajectory of the U.S. economy and key domestic economic indicators will play a critical role in shaping market sentiment. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.